Hello and welcome back to another day of charting. My name is Justin, and today we're going to be reviewing a falling wedge, which is a pattern I'm seeing here on the Nasdaq and also on the S&P. On the left-hand side, we've got the Nasdaq. On the right-hand side, we have the S&P 500. So, what is a falling wedge, and why do we care? A falling wedge is typically going to be a bullish pattern where we can note that we have a descending wedge or falling wedge, which means that we're setting progressively lower highs and lower lows. However, when we get down to the bottom part of the range here, right around the bottom, if, again, keyword here being if we're able to not only make it to the low, but break through the high, we're looking for a breakout to confirm we are breaking through the pattern, and then we're looking for a back test of the range. You're also going to note here that this pretty much forms a inverse head and shoulders. So here we have our shoulder, head, and shoulder. And this confirms we're no longer in the dominant dominant trend of going down. And that is how we can actually stage a reversal. This is so important for me because going into tomorrow, we have OpEx or options expiry, which for me was the most important day of the week after we heard from Jerome Powell. We're also going to get European PPI tomorrow, and Joe Biden is going to be in Asia. So the reason why I'm so focused on OpEx is because if they're going to go for a move, they should be double motivated to move it higher into tomorrow. And I'll show you the reason why. So over here, we've got the, first of all here, this is the chain for tomorrow, May 20th, monthly expiry for the S&P 500. Oh my goodness, are there puts? There is 100,000 in open interest at 390, 75,000 at 385. We've got 250,000 in volume at 390 and 300,000 at 385. These are huge numbers. This is what I mean by it is professional time. These are the market makers and the big heavy hitters who are going to be trading through to tomorrow. We can also note here that on the call side, they are building a call spread. However, there's no open interest, so it doesn't really interest me. I think that it's all about burning the puts. So I'm not sure if we're going to make it back up to 400, which was the max pain. It could happen, but I think 390 might be all we're going to get to now. We can also note that 390s are worth roughly $3. That's still quite a bit. So at 387, they're going to be getting their money back. This is important because as we look through to Monday, so what will typically happen on OpEx is that they go through to the monthly expiry as well so that they're able to smooth out if they're not getting the move they want. We can also note a similar pattern here at 390 down to 388. We got 65,000 here at 388 and 62,000 at 380. This is continuation. On the call side, same thing. We got 390 up here to 400. The puts are just dramatically more motivated. And last thing here is just looking over to the June monthly. So if this was going to be the bottom, again, keyword being if that falling wedge is going to break bullish, why are they not motivated to buy calls? They're not. Only buying short-dated ones. And they're willing to buy puts. They got open interest. They got volume. This is notable. Last thing I just want to point out here before we go forward is QQQ and SPY. We've been talking about an orderly decline, and our guesstimate for the closing price as of 9:30 Central Time, so that is about 2 hours after the market opens, was roughly 291 and roughly 391 on SPY. So we are currently in a period where we still have we still have an orderly decline. Here we're closing out at 389.5 on S&P and 289.5 on QQQ. So for me, this is still orderly. And if they want to actually move these charts higher, now's the time. We have extreme fear. We're now out of single digits up here to 12, still a very low reading. However, this falling wedge pattern is something that people don't really understand because they're like, oh, well, lower highs, lower lows, we're going down. Why should we stop going down? What's important to note here is that we now have 1, 2, 3, 4, 5, 6, 7 back-to-back red weeks. This is extreme, and I'll show you the reason why. So this falling wedge, again, this is where we could be getting a bounce. Might be short-lived, might be longer-lived. And I'm going to walk you back to the last time we actually have multiple red bars in the way that we do. I went back in time, and we can note here that we already had that volume breakout. We have it on the hourly as well. I'll look at that in a moment here. But just looking here at going back in time, right? 1, 2, 3, 4, right? Not enough. We're looking for 7. Even in 2020, right? 1 green, 2 red, 1 green, right? 2 red, 1 green, 2 red, 1 green. Yep, that's not it. Looking back to here, only 3. Here we got 3. Woof. So this 7 back-to-back red is like pretty unusual. Yep, it's pretty unusual. How far back do we have to go to actually find one? Whoa, okay, here we go. Where are we parting? Like it's 2011. 1, 2, 3, 4. Sorry, 1, 2, 3, 4, 5, 6, 7, 8. Whoop. All right, there's our falling wedge breakout. So that is a much nicer move, but there is the ultimate drop to a lower low. Is that where we're headed? That's the first time it happened. The second time it happened here is when, oh no, don't tell me, Justin. Don't tell me. Don't tell me. Oh no. It is when in 2008. And 2011 was largely due to Brexit. 2008 was related to the US market. So here we can note that we got 1, 2, 3, 4, 5, 6. It actually reversed there. So it's only 6. It's not quite 7 like we saw in 2011. However, what I'm looking at here is the falling wedge pattern. So what's important for me is just ultimately what happened. Initially, again, this is a weekly chart. So we had 6 weeks of selling. Then we had 1, 2, 3, 4, 5, 6, 7 weeks of flat. And then there's the ultimate drop. So the big question for me is this falling wedge pattern predicting that we're first of all going to get that dead cat bounce, break the pattern here. There's the back test. So again, we're looking here. There's our back test, but we did not actually curl and advance higher. And that is where we can note that this trend line is telling us that, yeah, well, we did break out. We were going up. And then what? We stopped going up. Start resuming the lower highs and lower lows. So the reason why this is important to me is because we start noticing that we get elevated volume. We do break out of the pattern, but ultimately we do fail. And as I noted on the options chain, if we're going to get a move, it looks like it's going to be short-lived. We're ultimately going to probably go down lower. So that is the current pattern that I'm noticing here. Second thing I want to point out is just on the hourly chart here. Then we're going to look back at the falling wedge pattern. So looking here on the hourly chart, what it tells me is that it's still very orderly. So if they want to burn puts, and again, there's going to be billions of dollars expiring tomorrow. How many billion? I don't know. Lots. Right, we have indexes, we got ETFs, we got single stocks expiring tomorrow. It's going to be a big day. We're still respecting the pattern here, so it's still orderly. We are starting to see volume come back in. So tomorrow is likely going to be a very heavy volume day. And every time we get right to the bottom, we form a base and then curl back up. Form a base on the bottom, curl back up. If we're going to do it, like the pattern's here, we need to start moving higher though. And the reason why I say that this might be a false breakout is because we're now going to have a look here at ARK. So ARK here is going to be showing us that as we get down towards the bottom here, and again, we are now lower. The pattern did fully complete. We did hit 37. I believe we hit 35.1. However, what I want to focus on is going to be this part right here. I'm going to zoom in and I'm going to show you exactly what I'm looking at. So what we can note is that, again, we have a falling wedge kind of pattern here, right? Kind of like a falling wedge. Then what happens? Well, we break out, we back test, and then ultimately fail. That's kind of what happened in 2008 too. Yes. And that is exactly what I am looking for. Again, capitulation, dead cat bounce, reject at the relative low. And the relative low right here would be right here, right? There's the barrier we're not going to get back through. And then low, lower, lowest. This would start the summer doldrums too, right? Dead cat bounce, get out of the way, form that lower low. But inside this period here, we're really starting to go sideways. And because the market is still orderly, I believe that this is kind of the base case right now. So now let's go back and have a look and see if there's anything else which could tell us that we are actually starting to repeat this. All right, well, let's look at ARK. Here we go. So ARK is interesting today because it's actually up. It's not up a little bit either. It's up quite a bit. It's up on the day. It is up by 4.5%. So this is capitulation. It's short covering. If it's going to lead to a rally, we're watching this relative low right here where the arrow is pointing to 52. So that is where I think we could max out. And this could take the course of a couple of weeks for us to get there. This definitely looks like a reversal pattern. We got capitulation volume. We have an inside bar. We have a doji, and it's not really selling off of the market anymore. Second thing to note is the Russell. So when we look back to the Russell here on the weekly chart, again, it's stabilizing. Higher high, higher low, bounced off the previous tops. It doesn't look all that bad. So the sectors that have been hit the hardest, meaning ARK and the Russell, are starting to show some signs of life. It's also important that as we look here to the other major assets like crypto, hovering around 3, hovering around 2 for ETH and 30K for BTC. up 5% a piece each. Again, if they can't get these things up, which are the most oversold and heavily shorted, how are they going to get everything else up? I don't know. So as we look back here to our formula to know whether or not the market is currently going risk on or risk off, we had a single day that closed above 400, and now we're what? Back below, we're right on it, right? Equals 30K, equals 2K for ETH here. So risk on is trying. However, the concern for me here as I wrap up, I'm going to look at two more charts. The first one's going to be QQQ. And the reason why we want to look at QQQ is because we were looking at that falling wedge, and we can note here, we're going to look at NQ. The falling wedge here shows us that it's actually a little bit more concerning than we would think because we got really close to that last week's low. If we're down again tomorrow, it means that the bears are in full control. They can't even move the chart higher just to burn the premium. So now we understand we're in this pattern here and where we are going to reverse to if we move higher. Again, if we do bounce, we're due for some relief. 7 weeks in a row is a really long time to sell. However, now when we look here to the yearly chart for QQQ, this is really bad. And the reason I say it's really bad is because we open the year off barely an upper wick and we just sell. We are now below last year's open. We are below last year's low. We are below the 2020 high. So what does this tell us? Well, we got a whole bunch of resistance here. 297.45 is going to be hard resistance. From where we closed today, that is roughly 2.53% higher. For us to get back up to where we started the year off last year, we got to go up by about 10%. So that is where, if we're going to bounce, it's how we could see that falling wedge ultimately fail. Last chart to look at here, the reason why, again, if we can't bounce now, it's pretty much lights out. We're going to be going into a bear market. And the reason why is because when we look here at ES, again, which trades continuously during the week, it's a 24-hour market. What we can note here is just that the low last week is 39.55. That's last week's low. The low we put in overnight, 38.56. Woof. Cannot really afford to revisit that area. Otherwise, it's going to be what? A bearish breakdown. If we get down to 384 on S&P, that is where we are now at negative 20% off the all-time high. And technically, where we enter that bear market territory. So with that said, I would really appreciate if you could smash a thumbs up, drop me a comment, and if you want more commentary in terms of how we got prepared for this week and where we think we could go, I would encourage you to watch the video that'll come up here in a moment. But like I said, the market is stabilizing. There are signs of optimism, but there is not yet that confirmation. I wish you all the best of luck into pro trading tomorrow, and I look forward to seeing you for the Friday live stream scheduled at 3 p.m. New York time for the final hour. Thank you very much. I look forward to seeing you tomorrow.